Okay guys, this is Chinex FX, and today I'll be sharing with you something really amazing. So I'll be sharing with you pitfalls to avoid as a Forex trader. Pitfalls to avoid as a Forex trader. So there are things you must not do. So there are mistakes that I have made and I'll be sharing with you so you don't make such mistakes in your trading. Okay, so I'm giving you 8 pitfalls to avoid. 8 solid pitfalls to avoid in your trading. Number 7 and 8 are very crucial. Number 7 and 8 are very important. You really don't want to miss out on number 7 and 8 because they can really do a lot to your trading. So you have to follow up to number 7 and 8, and you don't really have to skip to 7 and 8 because you have to follow through the count so you can be able to understand those numberings when we get there. So really quickly, let's dive into it. Pitfalls to avoid as a Forex trader. Pitfalls to avoid in trading. So one of the pitfalls you have to avoid is trading without education. Now, as a newbie trader, you need to acquire sufficient education. Many people make this mistake. How do you just jump to trade and you're not educated? Come on. How do you just get into a plane and you want to pilot the plane and you don't even know, you have no ideas on aviation, right? So you need to acquire education before you go into trading. If you don't, what will happen? You will get frustrated, right? You think it's scam, it doesn't work. Many people say it's all scam, right? So it doesn't work, these things don't pay. But the truth is they pay, right? I'm a witness to the fact that it pays. So seek education. Don't jump into the charts, don't jump into trading without acquiring education. How do you acquire education? Get a mentor, right? I offer mentorships too, where you can meet any mentor wherever, get a mentor, right? And then you learn, seek professional mentorship. Then secondly is starting too big. That's another pitfall to avoid. You don't start too big, right? So you try to curb, it's like you curbing your losses. Now, let me tell you a quick story. So my friend started trading. He just liked the idea, seeing traders, and just started trading. And firstly, he fell victim of the first pitfall. He did not acquire education. Then secondly, he started too big. So he first funded, based on his status then, he funded $3,000. That was really large. So he felt like he was just going to make money and he lost it, and that was really bad for him because he felt like, whoa, is this how this whole thing works? I thought it pays, So you don't start to be, curb your losses. That's why it's also recommended you start on a demo account. So you just start without having to put in your real capital into it, alright? So don't start too big, curb your capital at first. Then when you've developed your proficiency, you can increase your equity, alright? You can increase your account size. Okay, then the third thing, which is very important, is overconfidence and revenge trading. Overconfidence and revenge trading. Many traders fall victim of this. Your overconfidence comes in when you have a couple of winning trades and then you feel like, whoa, I'm in charge of the market, right? So I'm sure you've had that experience before. Okay, so you don't have to be overconfident. Yes, the market will always humble you. So don't be overconfident. Be able to guard the euphoria you get from your winning trades. You must be able to guard it cautiously. Okay, so reduce overconfidence. Know that the market trading remains a game of probabilities. That's it. That's why you see proficient traders tell you they like to take their high probability setups because it's actually in itself a game of probabilities. You must learn to navigate your way around it. So kill overconfidence. Then revenge trading, really quickly, comes in when you get into a couple of losses, right? And then you're trying to recover your capital. So you come into there and you say, I want to make some money, and you lose money at first. You go again, you lose again, you go again, you lose again, and now you're sad, right? You're angry. You're like, no, I need to get back at the market. I need to get back my money, right? So you must have been there, I'm sure, but you must curb it, right? So you must curb it. You must shun revenge trading. So what do you do? How do you curb it? Now you come, you open your laptop, you're trying to trade, and then your first trade goes against you. Instead of trying to recover your money, you reduce your risk, reduce your lot size, right? Now, if you go again and it's still going against you, you shut down for the day. You must not make it that day. You must not get back your money that day. from experience, from experience, if you try recovering your capital that same day, that same moment, you might end up losing everything. So this is another pitfall you should avoid moving forward as a forex trader. Okay, and then nextly is that you have to be able to guard your risk. Okay, so not calculating your risk to reward is a challenge. It's another challenge many traders face. So you must be able to calculate your risk to reward. Number 4, calculate your risk to reward. Now, what does this do? You see many traders, like I saw a trader. He was telling me, he calls himself a trader, so I'll call him a trader too. So he was saying he just got into this trade, and all of a sudden he just saw the stuff reading so much negative, and he didn't even know his account was just going, like he was shocked at the amount that it was. I was like, didn't you calculate it? So you must learn to calculate your position size. You calculate it with your lot size, your leverage, right? So you know how much you're willing to risk on the trade. You know how much reward you're going to get from this trade. Now, what will that do for you? Very simple. It will help you to stay calm. It will help you to have a decent psychology, right? So now I get into this trade. I've already calculated, okay, I'm going 5 pips SL on this trade. Now I calculate, maybe I'm using a standard lot. So I calculate that, okay, my 5 pips, maybe if I'm going on Euro USD, my 5 pips is going to give me $50, right? So I'm risking $50 on Euro USD. Probably I will do another video on how to calculate your lot size, okay? So in case you have difficulties doing it, so I will do another video subsequently on how to calculate properly your position size. So now, let's say I'm risking $50 on that trade. Now I calculate, okay, my risk to reward is a 1 to 5, right? So that means I'll be doing my 50 times 5, that's $250. So if the trade goes to my TP, I'll be getting a profit of $250. But if it goes against me, I'm losing $50. So you see, I'm properly aware of my risk. I'm aware of my reward. I won't be thrown off balance if I see it going negative. I know it can't go more than 50, right? Else, on rare cases where you have slippage, or a fundamental playing out and then slippage occurs, right? So, but apart from that, all things being equal, that's just it. You're calm. So if I lose, I know, okay, I was ready to lose $50 or on that trade here. So calculate your risks to reward. Okay, so I'm going to end this video right here, and I'm going to be doing another video where I will give you the remaining 4. Like I said, you don't want to miss number 7 and 8. All right, they are very vital to your trading. See you there. Now remember to click the like and subscribe button below, so when the next videos drop, you can always follow. All right, peace out, guys.